Good morning, people. Hope you're all doing well. It is January 21st here, Tuesday. Yesterday we did a weekly update. If you guys haven't checked that out, go check that out. There's a lot of information there that presented a sell on the overnight, which we were planning. I didn't flip on the long side, although it did get to our areas to buy. You can only do so many things, right? Catching highs, catching lows, doing them both, I think seems very unlikely and unfeasible, but that's life. Anyways, yesterday markets were closed due to MLK Jr. Day, so we did our weekly update yesterday, which was Monday, so Tuesday here, a shorter week, and yesterday was Trump's inauguration, right? Trump sworn in, and the market mover himself is back. Now, if you haven't traded a Trump moving market, you're in for a very interesting slash wild ride. And volatility, mean reversion, all of that XYZ I think is here for the next bit. So President Trump now in his inaugural address on Monday promised the golden age of America begins right now, stating that the U.S. would be the envy of every nation and will not be taken advantage of any longer. Other themes previously touted on the campaign trail were referenced as well, like drill baby drill, becoming a manufacturing nation once again and establishing an external revenue service to collect all tariffs. Also, don't forget the dozens of executive actions that were passed on Trump's first day in office. Any immediate reactions were largely muted with the markets that were closed yesterday, but crypto was a big winner after Trump unveiled a new meme coin over the holiday weekend. Bitcoin notched to new all-time highs of around $109,000 per coin before falling back as Trump skipped over the pro-crypto deliveries on day one. Meanwhile, stock futures advanced in the overnight following the best weekly performance for Wall Street since the post-election rally in 2024. And the inauguration also put a fresh spotlight on currencies and Forex. The Mexican peso slid against the greenback while the Canadian dollar fell to a 5-year low amid the news that 25% tariffs on Mexico and Canada could be imposed as soon as February 1st. Wow. The euro slipped as well, and with Trump issuing fresh tariff threats if the EU doesn't buy our oil and gas, though the possibility of universal tariffs was ruled out as the US is not ready for that just yet. Executive actions were on the radar over the impact on sectors ranging from tech and the auto industry. The US withdrew from the Paris Climate Accord yet again. Leasing and permitting for wind energy projects were halted. Electric vehicle mandates were revoked and illegal immigration was declared a national emergency. What about TikTok? Now, Trump is delaying the enforcement of the ban on the popular app by 75 days and suggested that the U.S. government should own half in the business. And overnight, right, markets did a pretty massive reversal here. We do have yet another earnings week coming up. Last week was very big bank focused. We had JP Morgan. Goldman Sachs, all reporting did pretty well, continuing the upside momentum. We also have the Bank of Japan, which is most likely going to be raising rates this week. That's going to be a key figure in terms of news, although it might not necessarily affect the immediate market. Is going to affect the yen, and conversely, the yen is going to move the equity markets most likely, considering the carried trade, quote unquote. Now, earnings is going to be kicked off this week with big tech, or I guess big tech earnings are going to be kicked off this week with Nvidia before the rest of big tech follows suit. Nvidia is holding out pretty well. Or sorry, not Nvidia, Netflix. They both start with N. Netflix. They're going to report today after the bell, which is going to be the first of the big tech names to report, and then we're going to see the rest follow suit. Apple, on the other hand, is one of the big names here that is still down, right? It's trading with a gap lower while equity markets continue their press higher. It's down pretty significantly from its all-time highs, and at this rate, the possibility to trade the bottom band of the auction before finding some support, which finds itself at 222, triple twos, or even all the way down at 205, which seems a little aggressive. But Apple usually starts the year kind of weak before catching a bid and doing pretty well. So right now, this is the only big tech name that's actually looking pretty crap right now. So we got to be careful with that, because on the overnight session, right, if we take a look at what happened here, NASDAQ, S&P, it doesn't necessarily matter. We had these like pretty big swings, right? Swing down, swing back up, a little swing lower, right? If we look at this in terms of its own little 30-minute blocks here on the overnight session, a lot of volatility and a lot of volume traded as well. So there's about 500,000 contracts that have traded today on the overnight session so far, which is fairly hefty. If I'm not mistaken here, these numbers seem a little wrong, because down here it says 240,000 contracts on the spoos. So if you have the right answer, let me know. But right now I'm a little confused myself. Anyways, the idea here that we talked about yesterday, this is the importance of watching our weekly updates, is that at 6,000 it makes sense to be a buyer on the S&P 500 to swing this thing back up to go and target that 60-70. So it was a 70-point move down, a 70-point move down, 70-point back, 70-point move back up. So Uno reversed this whole move. And today is going to be very, very detrimental for the buy side to just start expanding above that 60-70. I don't really want to see higher lows. I don't really want to see too much. If we do get that, it's going to be closer to 60-20. That's going to be a key marker that traders have to watch and keep on the radar here on the S&P 500. But best case scenario, we just open the bid in the morning session, start bursting through 60-70, and then dips get bought from that area to continue this upside move. We're at a very key, important area that had failed last time around, so it's imperative that the buy side shows us the strength here to start the week off, to continue this shorter week and propel markets higher if we're going to see this accumulation. I think that we're going into a period where markets do continue a step-by-step rally along with volatility. It's going to be a choppy rally. Trump now in office, and we're going into the end of Q1, or I guess into the middle at least of Q1, a little more bullish, as the end of this month, next week, we're seeing the Fed come out. And the Fed is going to be a big topic of conversation that with the new presidency, with what had happened most recently with inflation and their past Fed meeting, right? Are they going to change their tone or not? Because if they don't change their tone, this might probably just going to be a lower high in the overall market. But I'm looking for a nice green January, a green February, and then things might get rocky from there. So let's see how this shapes up. First real trading day of the week. January has been a mess overall, meaning that it was a little more difficult to trade. I would say there was a lot more swinging action, which again, right, welcome to a new reality. Adjust or get killed. And two, we've rarely had a full week in I believe we've only had one full week in January, and then next week is February, I think. Well, it's the 21st. It kind of makes sense for, I guess next week, the 31st, the final day is Friday. So 2 more weeks of January. And we've killed the first month of the year. So congratulations. Now, check out community.tradeproacademy.com for more updates and information concerning TPA and our market analysis. But other than that, let's open up our live trading room, see what we got cooking on today's session.